Today we're going to sit down and talk with Meena and get some good insight on what really is the best time to start talking to your kids about credit, and then why is credit important overall?
It's not. No, it is. It is. It is. No, when is the best time to talk to your kids about credit? You know, we talk to them about crossing the street, looking left and right, don't do drugs. Don't do drugs. Don't do drugs. Definitely don't do drugs. Don't drink and drive. There's a lot of things that as parents, I think, well, there's an immense amount of pressure as parents in general to teach our kids everything, which we're not going to be able to teach them everything. We can try. But one thing that we really, I feel like, fall short on is when it comes to financials. And I'm not telling you to have a budget for your 5-year-old, but teaching them the basics of financials, but particularly we're going to talk about teaching them the basics about credit. Having your child understand the value of money and knowing what money is, and that money buys things, and it's not necessarily just things that we want, but it's things that we need. Related to credit, there are times when you need to borrow money. Right. I want to buy $1 million house, but unfortunately I don't have $1 million sitting in the bank. So teaching them about borrowing money and what debt is, and that you can borrow money to buy a house or a car, and you can borrow money from a bank and you can pay it back to them, but in smaller amounts. Credit cards are another thing, like what a credit card is, and that's on a much smaller scale compared to a home, but you're borrowing money to pay back in smaller increments. Okay, also explaining to them what interest and payments are and how those work. You know, I think the easiest thing is to just take out a $20 bill and say, okay, I'm the bank, and I'm gonna be letting you borrow $20, and you're gonna pay it back to me $5 a week. Is that steep? $1 a week? No, that's $5 a week. Yeah. But when you pay me back in total, you're going to pay me back the $20 plus interest. And then how do we explain to them, talk to them a little bit about what a credit score is and what a credit report is. The easiest analogy that I can think of is that a credit report is essentially a report card for creditors, for the credit bureaus on you. So you work hard, you study hard, and you get a grade on your report card. Your report card is an assessment of your academic performance. A credit report is your assessment of your ability to borrow and pay back money, essentially for the credit bureaus. And when banks are looking at letting you borrow money, they want to see what your report card looks like. The higher your grades, the more willing they're going to be in lending you a certain amount. You get more for a lower interest rate, the better your grade is.
Got it.
Yeah. Okay.
Simple.
Linda, what is a good credit score?
Okay. I would say a good credit score is, between personally above 800, I would say is a good credit score.
I mean, I would consider that to be an excellent credit score, right? You have excellent, very good, good, fair, bad, and very bad, right? So on that scale, good being somewhere in the middle top, like what would you say is a good credit score? I would say 680. So 680. There are so many times when I talk to borrowers when I'm pre-approving them, and I ask them if they know what their credit score is, and they're like, yeah, I have really good credit. I'm like, okay, like what is really good credit to you? I get answers from like 650 to 1,000 in today's example. But the reality is everyone's definition of what is good credit varies. Right. And also from a lender's perspective, depending on the type of credit you're trying to obtain, it is different, right?
Why does your credit score matter?
Your credit score matters because the interest rate that you're getting from the creditor is determined based on your credit score. So, what does that actually mean? Right. You're going to be paying way more money in interest if you have not so great credit versus someone who has excellent credit, right? So, to take car payments, for example, the average interest rate for a new car loan is 5%, and the average loan balance is around $40,000. So if you put that into numbers, credit scores of 720 or higher, they're going to get like a 3.5% interest rate. Anything under, I don't know, let's say, what did I say, 620? Yeah, yep. Maybe 620. You're looking at anywhere from 17 to 20% interest. What does that actually mean?
Yes. What does that actually mean in payments?
That means you're looking at anywhere from paying $760 a month to $1,200 a month. Okay, so it does make a really big, it makes a very big difference. So there are 21 plus different ways to calculate a FICO.
Okay, cool.
Did you know that?
I didn't.
Every creditor has their own calculation that they use, but generally speaking, they're going to be, you have a different FICO calculation for mortgages, you have a different FICO calculation for car loans, different one for credit cards. The mortgage FICO is the most conservative. Go figure. Borrowing the most amount of money, most conservative. Yeah,
that makes sense.
It makes sense.
It does.
So credit scores or FICOs are calculated based on a couple of different aspects. You have credit utilization. Mm-hmm. What does that mean? Is that, should I explain that? Credit utilization?
Like how well are you using your credit, or are you maxing out your credit, like your available credit, are you maxing that out?
Yeah, so it has a lot to do with available credit. So if I've got 3 credit cards, each with a $2,000 balance, I've got $6,000 worth of credit balance that I could pull from. What percentage of that am I actually using? So that's credit utilization, and it is twofold. There is a credit utilization calculation based on each individual line. So how much do I have on credit card 1, 2, and 3? Okay. And there's also the big picture of the 6,000, how much are we using? 35% is based on delinquent accounts. What does that mean? Don't be late on your payments. 30% is credit balances, so we talked about the utilization of it and what that actually means and how they're looking at the balances on your credit cards. 15% is the average age of your account. I think that's one that a lot of people don't know. And then 10% is open accounts. So how many accounts do you have open? 10% is new credit inquiries. So let's talk about the budgeting rule. There's a lot of different budgeting rules out there, and honestly, each one it's not a one size fits all.
Okay.
I think everyone has their own priorities and everyone has their own financial situation. And I think particularly to Hawaii, we live in a really high cost area. And so there's like a 30-30-30-10 rule. That one I don't think it fits as well for us because of the high cost area that we live in. Our housing expense is actually much more than I think what would be in Georgia or Alabama or whatever.
Right.
So the 50-30-20 rule is probably the better rule for us because our housing expenses are so high. So the 50% you're putting aside for your needs. So needs would include your housing payment, groceries, car payments, things that are your absolute needs. It's not really negotiable, right? And then 30% we're putting aside for your wants. So entertainment, food, like dining out, not necessarily groceries. Dining out, entertainment, travel, 30% we're putting aside for your wants. And then 20% we're putting aside for savings and debt payoff. So if you have existing debts that you're trying to pay off, 20% of your monthly, this is after tax, so 20% of what you're receiving from your paychecks on a monthly basis, you're putting aside to either save or pay down some of your debts. Student loans, credit cards, whatever you have.
I think it's really important too, and something that I tried to instill in our daughter is really defining wants and needs. And it kind of does come into play there because, I might want this, or, I need a car, but do I want a crazy Lamborghini, or do I just want a car? You know what I mean? Like there's so many, it's really important to like help kids define that because it's such an early age. I think it sets a precedent for, how they're going to really look at things.
Last night, my 6-year-old had
we love her.
Full-on, like grade A meltdown out of nowhere. And I came running into the room because she was wailing on the bed, kicking and screaming. And I was like, what's wrong? Are you hurt? Is something wrong? And she's like, Daddy said he wouldn't buy me the dangly earrings. For real, this is a true story. Yeah, for real, this was last night. And I was like, what? Did he promise them to you? Did he, where is this coming from? Yeah. Have you asked him for them for a long time? I don't understand where it's coming from. My friend has dangly earrings and I need a pair.
Exactly.
That just reminded me of the need. And I was like, no, baby, you don't need a pair of dangly earrings. You want a pair of dangly earrings. You can pay for it with your own money.
Yeah.
Lost it ×2 because she was like, you guys are my parents and you guys, if I need it, you should buy it for me. Okay, so to your point, helping your children define what are needs and what are wants. And I think it is, in the brain of a child, I think every want is a need. And that's the challenge. And I think that's just the difference of maturity level. But really defining or helping them understand what are absolute necessary needs that you have to survive on a daily basis, a roof over your head, food, clothes, versus things that are more wants that are for fun, entertainment, or a new dress or purse or shoes or whatever, right?
I will say one of my proud parent moments was when I overheard my daughter say, "Is this a want or a need?" Like to herself.
Clearly,
and I was
have
just like,
I haven't crossed that milestone yet.
yeah.
Clearly.
But you know what I mean? Like
Yeah.
seriously, I was like, oh, okay. It did, she did get it.
I did something right.
Yeah, so we did, we started with the wants and needs. And many, many years ago, before we met, I had her talk with someone about understanding mortgage payments, understanding, okay, if you're going to make this amount of money and this is what you want to have for a monthly payment with the current interest rates, what do you need to start putting away for down payment? So we kind of backed into it. Mm-hmm. And, I really am proud to say that she is doing, I think she's doing more than what the 50, 30, 20 is, but she's got her, she wrapped her head around it.
Yeah.
So she is saving.
Right on.
And yeah.
On the theme of this conversation, like, you have to start small. You're not talking to your 5-year-old about mortgages. It starts with, chores. What is it that's going to motivate your child to feel like they need to do what you're asking them to do or make money, essentially, so that they can obtain what they're getting? And this is a small scale and grows as you get older, right? So first it's a Barbie doll, then it's a video game, then it's a new purse.
Dangly earrings.
The dangly earrings. Whatever that want is, identifying what that is, and then finding that motivation to push them to do, chores. I mean, chores is probably, depending on the age group, right? But being responsible in whatever you as a parent are teaching your child to do to reach their goal.
Right.
I want to end this on identity theft because I think this isn't really on everyone's top of mind until you actually become a victim of identity theft. So 1.25 million children are victims of identity theft every year.
So when you say child, do you mean under the age of 18?
Yep, under the age of 18.
Wow. Okay.
So as a parent, what can you do to help protect that? From the earlier ages, from 0 to 13, keep your documents safe. All of their social security numbers, their birth certificates, all of those things that have that sensitive data on it, keep it safe. Keep it in a safe, put it somewhere where nobody can access it. Okay. From ages 14 to 17, go to annualcreditreport.com and you can actually get a free credit report weekly if you want, for free for your child. And that's not gonna give you a score, but the only thing you should be seeing is no data found.
Right.
That's all you're looking for. Once they're 18, put them on credit monitoring, or have them put themselves on credit monitoring because they're 18 and they're adults. Have them sign up for a credit monitoring service so that they can monitor their credit. Make sure there's no accounts that are popping up that they didn't authorize, et cetera, right? But just being ahead of the curve in that sense of knowing what your credit normally looks like versus what it looks like, what it's not supposed to look like, versus when there's something new on it.
Yeah.
Okay.
So can we share those links? Can we share those?
Yep.
In a link down below?
We need to stop doing this. This. Okay. Yes. We will share that link.
Okay.
Okay.
Something really funny. I just want to share. It's probably not yet, but anyways, when our daughter went to buy her first car, I did co-sign for her, and they pulled her credit, and it was 0.
As it should
be. Yeah.
Mm-hmm.
But it was really cool for her to see that it was 0.
Yeah.
And now that she's subsequently paid off her credit, she actually has excellent credit. She did just go in and buy another car on her own now because she built up her credit. And she has excellent credit because she made her payments on time. She paid extra. So it was rewarding for her and for me to see as a parent that, she did it.
I mean, I think it's rewarding for an adult when you pay off something, or when you look at your credit score and all your hard work is paid off, right?
Yeah.
What are some things that you can do as a parent to help start establishing credit for your kids once they are 18? Even before 18, you can actually start to build credit. And at 14, you can start helping your child build credit. And the easiest way to do that is to add them onto one of your accounts as an authorized user.
Yep.
Whether you want to actually give them the credit card is totally up to you. But adding somebody on as an authorized user, they actually take on your credit profile. So adding your child onto one of your old credit cards that you've had for a long time, so going back to establishing the length of time that you've had the account, and obviously one where you have a good payment history, that's going to help establish or boost their score the most.
Nice.